Hello and welcome to Forex School Uganda. I am Godfrey. Today I want to share a news trading strategy that I usually use when it comes to high impact news. It's a strategy that is hassle free, it's free of the slippages that usually happen around news releases. Now, this is quite different from the one I posted in an earlier video. Of course, there are different strategies that I use to trade the news, and this is a different one from the one that I posted earlier. And I hope it blesses you. Trading news sometimes can appear like just a way of gambling, especially those that just place random trades, placing buy stops and maybe sell stops or limit orders, whichever the case might be, depending on where price is and where you're anticipating it to get to. But I personally do none of that. I'm not into the gambling business. Trading is a smart business for me. And so there are particular strategies that I use, and today I want to share one of them and hope you find a way how you can also add it to your trading arsenal when it comes to news trading. Let's go to the charts. This is a buy trade on gold taken after CPI news, push price to the upside. Then there was a retracement. This candle closed with a long rejection wick to the downside, much as it closed bearish. The next candle closed as an inside bar. It failed to break the low of the previous candle, much as it has well closed bearish, but you can see that the volume to the downside is reducing. This was a huge retracement candle. The next closed as a retracement candle as well, bearish, but with a long rejection wick and a body smaller than its wick. Then the next candle had even a much smaller body, indicating reduction of volume to the downside or momentum to the downside dying out. And so my anticipation was at the break of the high, should it fail to break the low of this candle, but instead break the high of the candle after the candle body's size reducing during the retracement, indicating reduction in the bearish momentum. The last candle failing to break the low of the previous candle and closing with a very tiny small body and a long rejection wick, probably 7 times bigger than the body. Anticipation was that we would see price rise once it breaks the high of this, the last bearish candle. We might see price correct or rather rise to this high here to fill this range to the upside, to come and retest this resistance after creating these long rejection wicks on retracement. We'll see how it plays out and not be stuck to the laptop to see what happens, as it's a bit late. Or we'll leave it and see how it plays out. We'll update you of the outcomes. Alright guys, take the time to avoid disaster. As you can see from the time that we took to the entry to this point here, it's over 1,000 points on gold, and we were risking 600 points. That's about 1.6 hour, 1.7 hour risk reward. Not bad for news trading. That's how I trade the news many times, as opposed to just entering and gambling the markets. These guys that like to gamble when news is just coming out, spreads widen at that time, and usually there's a lot of slippage. Besides, they're not even sure of the outcome. You let the market retrace, give you entry reason, and then you can take your trade from there. That's exactly precisely what I did. I let this news play out. Of course, I'd taken an earlier trade on GBP USD, which I explained in a different video. You should see the link in the description, where I traded the news on GBP USD. This very news, the CPI that was released today. But this was an opportunity on gold that I was waiting upon. I let the news play out. Then I waited for the retracement. I was expecting support to be formed here, but then it wasn't formed exactly at this point here. I thought this candle would close bullish, which would be a creation of support on this support area, where it would be bouncing off this support area after the breakout and the retest. But it didn't quite reach this area, and this candle didn't also close bullish. But like I'd explained at the start, you can see the volumes of these candles go on reducing, and what killed it was this body and this long rejection wick are almost similar, but they are smaller. This candle, together with its wick, is actually smaller compared to this body alone of this candle. that began the retracement. Now, the last candle in the retracement had even a much smaller body, wasn't able to break the low of the previous body, and it closed as an inside bar. And these two candles both had long rejection wicks, with the last one having a body size that is about 10% the size of this wick, which indicates to us that a bullish volume is coming into the market. The bears have lost their strength. This price could continue up to the upside, but markets are about probabilities. This is how it played out much later, with price later dropping all the way to the downside. But to recap it a little bit, this is how it looked like. So I let the news play out, and as you can see, it spiked way up to the upside. Of course, after this consolidation, you know that if price breaks out either side, it's likely to be a huge break. Why? Because price was consolidating within this range here, and so you can just know that it's gathering momentum to spring whichever direction it breaks out of, and you know that it's going to be a huge breakout. Why? Because of the congestion, the consolidation, the ranging period, and how big the ranging period was. So when it breaks out on whichever side it does, it's usually a huge break. So what I did was to let the news be released and price break out whichever side it does, and then I wait for a retracement. But now, when it broke out here to the upside, of course you look to the left and you see the price action. What we see was, just look at this. There's a resistance area here, a resistance area here, of course, as well as these consolidation highs here. So we saw price break out of this consolidation to the upside, and then we also saw it break above this resistance area here to the upside. Now when we look at this area here, we see there was a clean range to the upside, an area where there was neither resistance nor support in the area. It was just purely clean. Just so you can understand, it's just more like this area here, which is purely clean, where price just dropped without encountering any kind of resistance or support within the area, and so it left behind a trail of a clean traffic area. And so those are the areas that you look to capitalize on, because you know that once price is able to break into such areas, it's not going to encounter much opposition or resistance as it's moving to the upside. With that at the back of your mind, once price breaks out, you let it retrace. So it retraced to this area of support that I've marked out from the left. And so when it got to this area, you can see the momentum with which it broke to the upside. This momentum with which it broke to the upside. Now, look at the size of this candle here, which was the news candle. You also look at the size of the next bullish candle. You can clearly see that at the news release, the volume was really so much in the market. So it sprang up so fast with huge momentum. But then look at the second candle. You can see that the momentum had started dying down. The volume was dying down. And now that gives you an indication that probably price is likely to reverse. And now we see with this next candle, price started reversing. And you can look at the size of this candle. It engulfed this bullish candle on its way to the downside. And so that was a clear indication to us that price is beginning to retrace. That is the time that you start preparing yourself to strike once the opportunity comes for you in the market. It moved strongly to the downside with this candle that engulfed the previous bullish candle. And then with this next bearish candle, we see that it continued the downward move, breaking the low of this candle here. I mean the break of the wick here. So we see that it broke this low here, but as quick as it broke it, after reaching this low, it quickly sprang back up and closed bearish, yes, but within the range of this engulfing candle. You can clearly see that it was able to close back above the low, and I mean this low here, the low of the previous bearish candle. Now, that tells us that the bearish momentum seems to be dying down. Now, also, one thing to look at is the size of the wick to the downside. Compare the size of the wick of this candle with its body. The size of the body and the size of the wick are almost the same. Now, that tells you that the bears and the bulls at that particular time were probably at equilibrium. You couldn't say the bears were stronger or the bulls were stronger. No. But what you can tell that they are really at equilibrium. And now what you're looking for is an indication that one of the two sides is actually beating the other. And that we get to see within this candle here. You can see that this candle, now this other candle, first of all, it closed back to within the range of this first bearish candle that began the retracement. Then the next candle was able to break below and close back to within the range of this bearish candle. What we see with this last bearish candle is that it failed to break the low of the previous candle. So we see that it stopped within the range of this previous bearish candle. Now, not only that, besides failing to break the low of the previous candle, it also as well closed back within the range of the first candle that began the retracement. What I mean is this. You can see that these candle bodies are closing above the low of this first bearish candle that began the retracement. Besides that, we see that the size of this candle, the body size of this candle, is way smaller compared to the size of its wick. If anything, you could gauge it to be about, the body size to be about maybe like 10% of the entire candle length. And so the wick of this particular candle was way bigger than its body size. That tells you that the rejection is really so huge that price, first of all, failed to close, or rather to break the low of this previous bearish candle, and it was rejected so heavily to the upside that it closed almost as an indecision candle. Well, it closed bearish, yes, but the body size compared to the entire length of the candle was way smaller, indicating to us that the bullish volume is coming in. Now, when you put all that together, you're saying to yourself, if the next candle breaks the low of this candle, then probably the bears are coming in with strength. But should they fail to break the low of this candle and instead break the high, we know that this is the end of the retracement and the beginning of the upward move again to potentially come and retest these highs here. So that is the moment that you want to take advantage of and enter the trades and ride it to the upside. And like I've already explained in the live recording, we put our entry at the top of this high, we put our stop loss at the low of this candle here, we are looking at the low of the swing, and we are looking at taking profit at the retest of the high, which would be a clear 2.2R. But remember, when price was moving to the upside, the first candle stopped here and the next started from here. So this joint here could as well, when you drop down to the lower time frames, you realize that this area here is actually somewhat an area of resistance. Why? Because it was able to resist this price from continuing to the upside, causing it to close here, and the next candle had to open from there, you know. So that joint in between is an area on the lower time frames of support or resistance. So we are going to remain cognizant of it and look to manage our trade once it gets to this area here. We'll play this out. So right there, we were triggered into the trade and price continued to the upside right there. So when it got to this area, around this area above here, I closed my entry, I closed my trade, banked my profits and called it a day. And just to play it out so you can see how it later played out, it didn't quite reach this high, yes, but it later again dropped and would have stopped you out had you not managed your trade very well. So I hope you get a hang of the strategy and are able to use it in your own news trading the next time you see high impact news come around. Of course, you don't just take your trades randomly. No. There has to be entry reason. Make sure that you break down the market structure, get to analyze price action, how it is playing out, and you can clearly see that price here was testing and rejecting this support area to the left. That you should never forget. That you should never forget. Pay attention to market structure as well as price action. My explanation was clear and you are able to get a thing or two. Yeah, thanks for watching, and if you're new to the channel, kindly subscribe, like and share the video. You don't have to be new. If you're blessed by the channel, by the content that I post in the channel, kindly subscribe, like and share the video. I'll be bringing you more educational content, but in the meantime, you could visit forexschooluganda.com for more educational content while you await the next video that I'll be posting, that I'm sure will be educational and help you in your trading journey. I'll see you again.